News stories now with Stephen Carroll. Hello there, Stephen.
Hello, Catherine.
We're going to be starting off with the markets. They're not getting a very good start to this new week. Tell us why.
Well, a whole range of reasons, in fact, but a fairly negative picture across most of the Asian markets. That's partly down to the negative lead that came from Wall Street on Friday. Technology stocks had sent American shares tumbling yet again. In Japan today, I can tell you the biggest faller is Sharp, the electronics manufacturer, down 8%. After the company said it was seeking new ways of raising capital, causing some concerns there. And you can see there's no great dips on the Asian markets today, but there are investors watching very closely for a couple of big pieces of information coming out of Asia this week, particularly Chinese GDP figures due out on Wednesday. The situation in Ukraine also causing investor concerns as well. As usual in these sort of situations, it drives investors towards so-called safe haven assets like gold. Gold prices up in trading this morning.
OK, well, we've also got the International Monetary Fund's spring meeting that happened over the weekend with some very interesting comments from Mario Draghi, among others.
Yeah, that's right. The President of the European Central Bank said that he's rather indicated that he may have to take further stimulus measures if inflation remains low in the Eurozone. Now, he said the bank's board was in favour of extraordinary action to address the issue of the low rate of rising prices. And that could mean further interest rate cuts, but it could also mean getting involved in bond buying. The sort of stimulus that we've seen the likes of the Federal Reserve in the United States take up would be a particularly risky political move for the European Central Bank if they were to do that, and would mark a change in direction in their policy. But this risk of deflation or falling prices is one of those that was raised by the International Monetary Fund during its meetings over the past couple of days. And in her closing remarks, the managing director of the IMF, Christine Lagarde, said that the global recovery remained fragile. Let's take a listen to her.
We're moving into a strengthening phase. As I said, the recovery is turning. We're turning the corner. The global economy is faring better. It's uneven, it's too slow, it's too fragile, which is why clearly, in addition to the pursuit of appropriately paced fiscal consolidation, appropriately articulated monetary policy, and it varies from one country or one region to the other.
Let's move on now with a couple of the other day's business stories. In the Middle Eastern airline Etihad is said to be close to a deal to buy the struggling Italian carrier Alitalia. Italian media reporting that a deal to buy 49% stake in the airline could be announced as early as today. The Italian airline was kept afloat by a €500 million rescue package last year, but its massive debts and the prospect of huge job cuts have been obstacles to the talks with Etihad. Glencore Xstrata is selling its stake in a Peruvian copper mine to a Chinese consortium for almost $6 billion. Chinese authorities had sought the sale of the company's share in the Las Bambas mine after Glencore bought Xstrata last year. It's the largest Chinese acquisition of a mine to date. And Facebook is close to getting permission from Irish regulators to provide financial services in Europe. Approval from the Irish Central Bank would allow the social network's users to store money on Facebook and use it to pay and exchange with others. The move is a key change of direction for Facebook, which makes most of its money from advertising.
OK, now some of the pictures we just saw there included pictures from Silicon Valley, which we all know, I think, because the technology centre pretty much of the world, really, isn't it? But it seems that in the United States, tech companies are increasingly heading to Washington, D.C. Why is that?
Indeed, this is a move that you've seen, as you say, the concentration in Silicon Valley is something that's known the world over. But the US capital is now trying to get in on the act with the resources of the federal government, helping new companies to set up in the US capital. They say it's not just helpful to have ready-made customers on Capitol Hill, it's also a ready source of talent. William Edwards has the story.
1776 says it wants to start a tech revolution. Named after the year the US declared independence, this incubator for technology startups says Washington is ready for a shake-up.
We still access education and healthcare and transportation, energy in the same way we did decades ago. And so DC is poised to be a hub of entrepreneurship because those industries are really ripe for disruption.
Just a year after opening, around 200 companies are based here, attracted both by tax incentives and private funding. New ventures get to interact with other startups and have access to visiting technology and business experts. Among the companies here is RideScout. Their app allows users to look up all kinds of travel options. For them, the proximity of government agencies here makes a difference.
We've talked to the Department of Transportation. This is something we think, federal entities would find very useful, both at their workforce level and from a policy perspective.
It's not just access to government that's useful, though. It's also access to the talent that government attracts.
The federal government is always recruiting some of the top computer scientists, and we're able to attract that talent to work at our company.
A 2013 survey by Fast Company magazine found DC had a higher number of startups per capita than any US state. While it may not be about to out-innovate Silicon Valley, it looks like Washington will soon be known for more than just politics.
Okay, thanks very much, Stephen Carroll, with the day's business news here on Live from Paris. And we're going to stay with all things